Most traders enter the market at the wrong time and lose money.
In this video, I'll show you the MACD trend strategy, a powerful tool to identify market trends and high probability trades. Make sure to watch until the end because I will share realistic win rates, risk to reward ratios, and tips on avoiding common mistakes.
Let's start with the basics. MACD stands for Moving Average Convergence Divergence. It's a momentum indicator that shows the relationship between two moving averages.
The MACD line and the signal line help identify bullish and bearish trends, while the histogram shows momentum strength. Why does this strategy work?
Financial markets move in trends. MACD helps traders spot when momentum shifts and confirms trend direction.
Trading with the trend increases the probability of success. Who should use this strategy? This strategy works well for beginners, intermediate, and even professional traders. It can be applied to Forex, crypto, and stock markets. It works best in trending markets and may give false signals in sideways markets. Now let's talk about the tools. You need MACD indicator, default settings, 12, 26, 9. Any charting platform like TradingView, Binance, or MetaTrader. Time frames. 1-hour charts for intraday trades. 4-hour charts for swing trades. Avoid very low time frames to reduce noise. Detecting ranging markets. If the MACD line and signal line cross frequently without strong direction, and the histogram shows small oscillations around zero, the market is ranging. Do not take trades in these conditions. Entry rules. I trade. MACD line crosses above the signal line. Histogram turns positive. Price is above key support or EMA 50. Enter after the confirmation candle closes above the crossover. Sell trade. MACD line crosses below the signal line. Histogram turns negative. Price is below key resistance or EMA 50. Enter after confirmation candle closes below the crossover. Stop loss placement. For buy trades, below the previous swing low. For sell trades, above the previous swing high. Logical stop placement is essential to protect your capital. Take profit rules. Use a minimum risk to reward ratio of 1 to 2. Example, if your stop loss is $50, aim for $100 profit. You can also trail your stop to maximize profits as the trend continues. Risk management. Never risk more than 1 to 2% of your account per trade. This ensures survival through losing trades and long-term consistency. Performance. Backtesting 100 trades with this strategy shows win rate, approximately 50%. With proper risk to reward, 1:2 or higher, the strategy is profitable even with a moderate win rate. Common mistakes to avoid. Trading during sideways markets. Ignoring stop-loss rules. Entering before MACD confirmation. Overtrading during low volatility. Summary. The MACD trend strategy is simple, reliable, and effective. It helps traders follow the market, not predict it. Consistency and risk management are key. If you found this video helpful, like this video. Subscribe for more professional trading strategies. Comment below which strategy you want next. Trade smart, follow the trend, and use MACD to spot high probability trades.